return will.
So 2025, it will be filed as a tax group itself.
Yes, 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 yes. Such scenarios, this is one of the common question that you asked. Thank you for your question. But we will cover this with the multiple, the scenarios when we come on that. Because today, what is our learning in the text group to understand the basic framework. So I tried my level best to explain the basic text group framework, how will happen, what will happen, of course. But this is not the comprehensive coverage of the topic. This text group, again, it will take the one session, 4 hours, 5 hour sessions, okay, where we discuss in more detail. But here the point is that while we understanding the overall framework, this is our main framework so far we are understanding. So today we are reaching to that. So moving forward, the each topic like the tax group, loss relief group, qualifying group, okay, the elections, that we gonna cover on the each session with the example. So just imagine, we covered, I think, only the 30-40 minutes in the text group to understand the basic framework. When we come in the practical implication, how to record and what are the scenarios, that also will take more than that time. Anyhow, let's start our session number 8, dated May 17, 2026. So now is the part is 18. So the part number 18, so we gonna discuss over here. So the part 18, in which we gonna cover the transaction with related party and connected person. So be attentive, be active, understand the fundamental and concept of the each framework, each principle that is coming or applying under the text. And mostly we are sharing the relevant article also. If you want to go for the reading, okay, after each session, you go and read that article, and the next session you may ask any further clarification is there. But from my side, I'm going to try to cover all the possible scenarios and the explanation of the implication of the relevant article. Of course, when you're going to apply with the practical scenario, that will give you some challenge. But if you do some study and the R&D on that, you can handle on that. Okay, so our fourth out of eighth adjustment, transaction with a related party and connected person. But here is the important part. Again, the same, we have to understand the related party and connected person. So this is very important. Let's understand that, then it will be easy what we have to do. In principle, if I say as per the article of the city law, they are saying transaction with related party could not be on arm length. Okay, could not be on arm length. What is the principle, the main point, not on arm length? They are not saying 100%, they're saying not be on arm length. So the at market value, okay. So we have to record at the market value. What are the original transaction and the market price, the difference we have to add back. Why to add back? Because it will increase our tax base. It will increase our tax base. But before diving into that, if I say by law and by article, this is the law article is saying, but how, this is the same thing happen with us, same thing happening with other participants and other students who's learning from the different institute, because to enhance the scope, the timeline will be there. Commercially, is not possible for them to cover in the 15 session. Commercially, is not possible. If they go much more detail, they may be capable or not capable. I'm not questioning on that. I'm saying the commercially is not viable to extend the detailed discussion, detailed understanding with the each topic. Why? Because they have to cover within the limited time frame. So this is the important, because associated costs will be gonna increase. So here the transaction with the related party, one of the eighth adjustment. So far we covered 3 adjustment. Now we're gonna cover the 4th adjustment, transaction with the related party. So now the related party, again they mention two words. One is the related party, another is the connected person. So let's see, first understand the related party. Again, the related party concept is we knows from the accounting point of view. So first understand tax. There is a different groups. Accounting group. This will be again belongs to the previous, but accounting group, tax group. Let's take the basic example. Accounting group and tax group are same. Both are not same. This is by law. This is by IFRS. So now the question is coming, okay, tax law is saying follow the IFRS. This is the beauty of the law. They give us, okay, as a journal, as a standard, follow the IFRS law. But at certain point, he will come and give us follow the law. When the law is coming, he will overruled the IFRS. When the local legislations are coming, even IFRS saying, when the local legislation are coming, follow the local legislation. Follow the local legislation. So if the law is coming, so he will suspend the IFRS, suspend on that particular area, particular transaction, right? So the accounting group is saying 50%, okay, the definition of 51%. So that under the law, they have tax group saying the 95%. Anyhow, this is the just basic understanding. Okay, our concept belongs to this, the related party. There are the two words, one by one we're gonna cover. The related party, I'm gonna take the same example that we took in the previous. Okay. We said A, then we said B, we said C and D. So these the four companies are the related parties. I'm not talking about here the 95%. Even the related party transaction are that as per the tax guideline, they're saying 50% or more. Common ownership are controlled. Control is very important because the control is very important. The common ownership plus the controlled. Control, IFRS is focusing on economic ownership. Economic ownership. This is very important. Even the owners is somebody else, but who's economically controlled. So one of the common in the market here in other part of the world also, whoever have the control, so he's getting the benefit from that. We done the previously and recently also we have the one project assignment is going on, and maybe you also seen in routine practical life. Let's say two partners. The example I'm giving to show the control, what is the control, what is the power of the control versus the ownership. Control versus ownership. So here the partner A plus B. There are two partner. We said, so now partner A have the control. Okay. 100% control. Although the ownership 50%, 50% each. So now who's the control? Who's running the show? What he did, he made the investment. So what he's doing, he's saying, okay, I will do the investment plus management, right? Of course, against here another, once he do the management, he say, okay, you put 50% capital, I put the 50%. I'm managing the company, so I will get the salary remuneration. Okay. So whatever they agree, they say, okay, equal capital, I'm managing the company, so I will get this salary from the company against my management. So now the 100% control with A, partner A. If the control is A, so he's deciding at what price is selling, to which customer is selling, to which contract and the project is take. Okay. So ultimate, he have the 100% authority. And mostly the dispute is coming, mostly dispute we've seen in the market. It's not always, but it's still part of the market, maybe 20%, 15%. We may disagree on the percentage, but we do agree the dispute may come under such scenarios. That's why the corporate world, they document, and the each step to be documented, each power to be documented, each transaction to be documented. This is the corporate world. But wherever come to the SME section, such documentations are not there, such contracts are not there. Even the same example, if you took, okay, actually the 50-50, but in the trade lessons, in the MOA, this guy is a 100% owner. Just understand the reality of the market, how the things are working. This relation start on the trust. The another important factor, this is start on trust. But again, having the only trust is not sufficient. What are the paperwork, legality, and the commercial documentation is also important. So that is the lacking. Okay. So now I'm just giving the example of the control. The control is here. The control, he's deciding what price to which price. And ultimately, he's handling the accounting books. Handling means heading the books. So dispute is coming. Okay, so he's saying company is in a loss. So what happening? He have another supporting business, Mr. A, like I'm gonna say the CAC means A, he establish another business. Is common. He's going in the profit, and this company is in loss. One of the, so what's happening? The resources under the control of A. He's may utilizing the resources to establish his own brand also by using the same resources. So means the cost is recorded over here, benefit is going to here. Why? Because he have the control. So he established his parallel business versus here the dispute why our business is in loss. And the same if accounting books and everything is under the control of this person. So just imagine how the second partner will get the transparency from here. It's a rare chance he may get the transparency. He will say, okay, I have 10 employees, the cost is there verified. But what is not transparent? What is not transparent? This part is not transparent. Why? Getting the same resources, establish the another business. This is one of the common example. So now the importance of the control, you understand, because he control the resources, implies vehicles or any other plants supporting this business, and this he established in 2 years, new business, and this is in loss. Anyhow, the point was here to control. I believe you understand the power of the control. So that's why the even IFRS is saying the economic ownership. And when we talk about the tax group is saying the economic plus legal ownership. Economic ownership, what they think, eligibility of the entitlement of profit. Okay. Even someone, and mostly we've seen in the one of the another practical scenario and the common example. We know in the UAE, we know in the UAE there is a concept of local sponsor. Rule is 51%. Now, some participant will say, okay, this is not anymore. Since June 2022, they will say, okay, since that is not anymore. Do you agree with me or no? Or still is there? Do you, would you please confirm this rule is still there or is not anymore? Do you agree still 51% local sponsorship is there rules or no? Okay, let's continue with the same. I appreciate your participation. Uh, Whenever we come out, so this issue may happen. Okay, so the reality is that some of the activities, this rule they allowed fit. Some of activities, this rule is not there. Maybe in Dubai is more flexible versus the other Emirates, Northern Emirates. Okay. 1 + 6, total 7 Emirates. Dubai is more flexible, but still 100% this rule is not all over the UAE. If we go the other Emirates like the Sharjah, Ajman, Al Quwain, so they will say, oh, only the manufacturing, you can go 100% expat ownership. But Dubai maybe have the more like the accounting lessons, tax consultant lessons, 100% expat can take. Versus here, you still need the local that local agent for the professional local agent. Okay, for trading local sponsor. So this is the I'm saying still 100% is not eliminated or they given the freedom to the expat. Plus they added the UAE national. UAE national. Anyhow, so the concept what we are discussing related party. So we said that company A, B, whatever they are doing the transaction between them, it would be required at arm length. I believe the concept of the related party we understand. We said the more than or equal to 50%. If you do the transaction, they are on related party, and then we have to assess is recorded at arm length or no. Now let's say the example of the arm length. Company A sold the goods to the this is a related party. I'm writing the RP. And the same company A sold to D, unrelated party. third party. Okay, third party. So when he sold to the third party, he sold at, I'm taking the example, let's say the cost is a 80, so he had the 20% margin. So he sold at 100. The same product, when he sold to related party, is 80 plus 10. So he sold at 90. So now the definition of the arm length, this is the market value, and this is not market value. The law is saying, so whatever you sold to the other party, same price you have to charge when you are selling to the related party. So now the market value is 100. How we come to know? We go in the market and see the prices of the some of the standard product. We can say the cold drink, Coca-Cola, Pepsi, or the some other common. So prices are standardized. Okay. As a retail price, we seen the same price 100 units, but as a because retail is end user, but business to business price may differ because they are giving the margin to the distributor also before selling. So now tax authority is saying if you sold to the third party as 100, here's the 90, so there is a difference of 10. This different you sold to the related party seem like if you give to your family member or your kid something, so you will say, okay, he's my kid, so even I'm gonna charge him, so again I have to pay from my pocket. So let's give him on the reduced price. But tax is not looking in this way. They have different point of view. They're saying whatever sold to third party, same you have to charge. So here is the accounting profit. So let's say accounting profit is a 1,000, in which this impact and this impact is already there. Okay. We seen and identified that there is a one transaction that is not on arm length, that is this, and the difference is this. So what authority is saying, add back. So this is the taxable income. So this is the transaction with the related party and effect of the related party. Whatever the amount is not on arm length, we have to add back. Now tax base is increase. So this first concept, we understand what are the related party and what are the criteria of the related party. Okay. We understand the controls, we understand the economic ownership. Okay. So in certain time, maybe the ownership is less than 50, but still you have the control. So such scenario, we have to look case by cases. Now the second point is here, the connected person. Connected person. So what is the connected person? The important concept for the connected person, we have to understand that also. We take the same example. If owner is here, owner. If owner is here, the same owner, you make his wife as a managing director. Managing director, because commonly we've seen in the previous session in the market such scenarios, they want to reduce the tax base. They want to reduce this tax base. They don't want to pay. So they are saying, okay, I can make the Mori contract with my name of wife, Mori contract. I'm paying the salary, let's say the 30,000 per month. So just imagine 30 into 12, 36,000 or 360,000 into 12. So annual tax base is reduced by 360,000. So if you just take the 9% and that much tax you saved. So this is the definition of the connected person. They saying owner may do in this way and reduce the tax base because this is in his control or the associate. Now they said this is up to fourth degree. Fourth degree. Four. Up and down, left and right means your wife and your wife parents, okay, your wife sister, your wife brother, then continue up to fourth degree. So we will discuss in the next. For the honor, kids, father, grandkids, grandfather, grandkids, grandkids, grand forefather. So this connection will be go up to fourth degree. But the our concept was that, so if any transaction with the connected person, that is also subject to arm length. What is the arm length? The first point, if your wife is not working in the office, you just paying the salary, this is also not deductible. In accounting, you may deduct, but in tax, you have to add back. The GAR rule will be applied over here. GAR, General Anti-Avoidance Rules. Why? Because you did this whole arrangement to avoid the law. Even you have all the paperwork, but tax authority may establish and they will say, okay, through the routine operation, through the your okay, let's take the example. If she is the managing director, so what is the role they perform? Okay, of course, they will do some signing the paper. If she's managing director, of course, they sign the POs, they sign the sale orders, they sign the payroll. So some activity it will be there, na? So very easily, the FTA officer during the audit, they can pull such information. They knows in the market is happening, and even the person who's doing, he's thinking, I'm smart. Just imagine the people coming from the authority, he have more cases, more experience to look these words. He will ask only 10 question, 10 quiz, and you will be out. If this is not the genuine question, you will be out. And text, then the officer will make his assessment plus the penalties. So it's subject to that. This is the where is not the genuine case because he gonna see, okay, if she's work coming, where the attendance? Okay. If she's coming, where the paperwork is signed. If she's coming, what the activity is performing. Anyhow, this is the basic point. I just try to explain the concept. But we're gonna take the example of, we're gonna take the example. We're seen in the market and they're saying, okay, just proceed with that return filing. We will take care. They don't have any paper. They're saying, okay, we'll take care. This is the market response without giving the supporting, even highlighting, even show the importance. They're saying, okay, give us the paper, we will sign. You proceed. When the tax authority is coming, we will look into that. So this is the market response. They don't bother. Same thing happened with auditor also. Then when auditor asks, they say, okay, give us some paper and we'll proceed with that. Anyhow, so the first case we seen the where the maybe GAR rule applicable. First rule we seen the GAR, General Anti-Avoidance Rule. Now the second rule we ALP, arm length principle. So what is the arm length principle? So this is the our main concern with the connected person transaction. Maybe the wife, maybe brother, maybe sister, maybe his brother have another company. Maybe he have. I'll take the example of other company also. Let's take with this. First, if we implied our wife, our brother, our up to fourth degree. I'm gonna use not only the wife up to fourth degree relation. If we implied, because why I'm taking this example, this is one of the common in the market. Employed. And let's say we are paying 70,000 per month. So 70,000 if we paying per month, so how much will be total over the 12 months? Anybody would like to give? Anybody would like to give? Yes, Abdullah, not anymore. Yes, thank you, Abdullah. Okay, would you please just give me the what is the figure of this? Guys, be active with me. 70,000 per month into 12, how much will be the total? I appreciate if you unmute yourself and let me know 70,000. Abdullah, okay, 840,000 annual. Now in the city return, they given us one. They said if you have the transaction, this is the reporting and the disclosure under the connected person. I will share the relevant also. If you do the transaction with related person above 500 annual, you have to disclose. Disclose means you have to add the names, detail, and relation, and we have to report, okay, we are paying this. Then they will say, okay, this is the actual you paid as the expense. What is the ALP? Okay. Yes, Abdullah. But I appreciate if you respond fast. Here, arm length principle, they saying, okay, how much? Now, commonly we see, okay, what is the benchmarking? What is the transfer pricing in this regard? This is another scenario. This is another TP question. The complication is coming from there. What they will do, they will say, okay, go to any consultant. They will print 4 or 5 pages report and give them, okay, this is the arm's length principle. No, this is not the benchmarking. Trust me, the benchmarking is very comprehensive based on the database, paid database. Okay. I will share you the link on that also, but in standalone buying the database is expensive. Maybe $100,000 per year you are paying to just take the database, and then you, after taking the database, again the same to same you have to do. The currently benchmarking available in the market, most of the you paid like 4,000. Minimum I think is 5,000 they are charging, but even that is not the 100% reliable. That may be not 100% reliable. Why? Because the database cost is 100,000 per year USD. So plus the active effort of the guy, effort of the consultant, effort of the consultant. Okay. So what he's charging, from where he's giving the, okay. He might take the pictures and something that is not the valid as a reference to the tax authorities. So this is the TP criteria or complication, and people are looking, okay, you give you file the return in 1,000 with transfer pricing, and people are doing. I give you the example in the previous how it's possible the guy in 1,000 can do this, because he don't know what is the applicable regulation, and he knows only the basic principle how to submit the return, how to submit the return. But what our learning is not to submit the return, our learning is how to file the complied return, how to be complied return as per the law. If we have to comply the return, the effort is more, time is more, cost will be more. You cannot expect in 1,000 to be return filed. You cannot expect in 1,000 the give that benchmarking, give this. So of course he have the some printout. He's changing the name on that printout, adding your company name, and he's giving you 6 to 10 page report, and you are happy. Okay, I did well. I squeezed the consultant and paid only 1,000 or the 5,000 and happy. Okay. Yes, you are okay because the person who give you, he also knows you don't know about transfer pricing. He also knows you are not familiar what is the transfer pricing, and that's why you are expecting the very less some price. While so that's why you are happy. You feel you are did the compliance, but the reality is different. When authorities are coming, you are not able to justify. And this is not the our topics, but reality is the same. So we are discussing the first. We said okay, 840,000. Let's take one example for 840,000. How the practical will be. Let's try to understand the concept how it will be. Let's say I'm gonna give you another way of measuring way of thought. If company turnover is a 3 million, 3 million AD, and you are taking the salary one of your connected person, another you are taking under own. As the owner, you are saying I'm taking also 60,000. Total turnover is a 3 million, and you are taking the salary. Here's 840 plus 560. So how much is the total salary? So just imagine 840,000 plus 560,000, 1.4 million. I'm just make the 3.2. I will let you know because for understanding the example, 3.2 million is your turnover. If 3.2 million turnover and you took the salary under your wife and under your name, 1.4 million. So how much is left? 1.8 million. Because you don't want to pay tax. So it's practically when you talk about the benchmarking, if company itself do not have that much, the sales and expenses, so of course nobody will pay this much salaries in the market. So what is the arm length? Similar company in the market, similar company who have the 3.2 million, how much salary they are paying? Maybe they are paying on the same position 15,000. To understand the arm length, maybe the other companies on the same position is paying the 15,000 and you are paying the 70,000. Tax authority is not blind. Okay. So this is the basic concept while you look into that. You ask the consultant, he wants the business, he will give you the benchmarking with the 70,000 also. The reality is that he want the business and you want to cheap price, he will give you against 5,000 and you will be happy. I save the 9% tax and there is not the benchmarking. It's not gonna happen. It's just piece of paper that make you happy and paying the less. Okay. Anyhow, because the person who knows the transfer pricing, he will never give you. What the people are doing, they maybe change the name of somebody else printout and put your company name and okay, so this is the basic concept. If you look in the market, what is the compensation on this similar, the company size? So this is one of the basic understanding when we look towards the connected person. I believe we can cover this connected person. We covered the related party also. The benchmarking basic fundamental we covered. So any question, please? Any question, please? I appreciate if you have any question, please. No question. It looks I'm explaining too much or I'm too good. Nobody asked the question, or you are not active. It's difficult to judge over here because if no question, either I'm too good to cover all the things or you are not active. Anyhow, we covered this part also, the related party connected person. Let's go with the our standards, the slides. Related party transaction could be, the word is could be, not on arm length. They're saying it's not always, it will be not arm length because most of the people maybe already did on the arm length. If not on arm length, we have to add back as we did in the 10 as a add back. So now the example is the person owner of the company, high salary. We discussed that employee of the company, we discussed owner plus his wife. High salary, hire wife in own company as a manager, remove excess salary. He's saying, okay, the accounting you are doing, when you do the benchmarking and transfer, you say, okay, market is paying 15,000 on the similar position. It may be 15, it may be the 10. But again, if you see it's coming in the same range, 12,000 or 15,000, if market is paying 12,000, you are paying 15,000, it's not the big difference. But paying the 70,000 is a big difference. So they think whatever the excess, we have to add back. Add back rules we already understand. Let's say we took the 70,000 salary and market is 15,000. So what is the difference? 55,000. They're saying add back to the income. So this 50,000 into 12. So this is saying, okay, whatever you did in accounting, fine, this is your internal matter, but while submitting the return, add back. Allowable expenses for the business would be market value or compensation paid in the market. For this similar position may be considered market value if salary paid above market value to be added back as is already deducted in accounting. So this is the we discuss and covered and understand in this regard. Let's understand the fourth degree. This is the also important about the fourth degree. Fourth degree, it may be from the juridical person or the natural person. Here we're going to discuss the natural person point of view. Natural person point of view, connected person. Any questions so far? So the same point, or this we're covering up to fourth degree of the blood relation, 360 degree. The important is that 360 degree means if this is the natural person, owner of the business, so what we have to do, we have to look into the up to fourth degree. 360, this side, this side, this side, this side. Fourth degree, sorry, I have to make in the middle. So natural person, this side, this side, this side, and this side. So let's take the example up and down. This is the 360, now the fourth degree. Let's simple example, father, okay, and child. First degree, first and the first. Second is the grandchild, grandfather, second degree. This is the second degree, second degree. Now let's take the grandchild, third, then again grandchild, fourth. Same way, grandfather, grandfather, fourth degree, third degree. Hope the concept of the fourth degree blood relation is understanding. It will go continue the same. I'm giving you only one example. So just continue your wife. Consider from your wife, it's again fourth degree. Now the same scenario from your wife also 360 degree. Because first degree is here, 3 degrees left. If your wife, brother, wife, sister, again, sister, kids, child, it will be on each point we have to count here to here 1 degree, 2 degree, right? So here 1 degree still left. From sister, his husband, then continue. So here I give you the idea how to count the fourth degree in each side 360. So this is the important understanding up to here. Let's take wife, mother. This is the natural person we understand. Wife, mother, fourth degree, father. This is not the great grandfather. This is a typo error. Great grandfather, either way. This is the natural person, this is juridical person. Juridical person where we mentioned the 50% or more than 50%. This is the equal to 50 or more than. Now the related party from the juridical person. Throughout the taxation, always the concept will be discussed or learned or the implication, the law from the natural person and the juridical person. Keep in mind, this both will be run parallel. Either we are discussing the juridical person whenever you trying to understand something, see either the juridical or the natural person, because sometime or the most of the time the implication may change. During our previous learning and the group discussion, we start discussing with the juridical person. At the end, the person is who raised the question that belongs to the natural person, because he did not explicitly specific mention about the natural person. So then at the end, we concluded after 2 hours, 3 hours. So he said, okay, everything is happy. We just asked as a casually, okay, now your sister company will be complied. He said, no, this is not sister company. This is the natural person. So, the scenario under natural person may differ. So eventually that group is shocked and they said, okay, the importance of the information, the importance of the fact is very should be clear from the beginning. Otherwise, the implication or the compliance will not be there. So this is the another reality, mostly over the WhatsApp, over the chat, over the short we ask from the chat GPT or any other source, because you not give him the proper information, that he will not give you the proper result also. They said, okay, we discussed with our auditor. One point he said is good to go. And why, as a consultant, as a tax consultant, you are saying is not? The reason is that auditor is not looking from the perspective of the law. He is looking from IFRS. So where law is come, local legislations are come, so he will overrule the law. Oh, sorry, he will overrule the IFRS. So he come back and he said, the auditor give me the reference. Okay, law is saying as per IFRS. Yes, this is a general rule, but exception will remain there. Wherever the local law want to accept the IFRS, he will do. He will say, okay, follow this. If that legislation is not there, then as a standard, as journal, you follow the IFRS. So this is the importance between the tax consultant or the tax professional, not always the consultant, but the most of the account internal team or the people are learning the tax also. They also understand this. Okay, auditor is saying for the IFRS, so we don't have to rely on the auditor. We don't have to rely on the auditor. They study themselves and they find, okay, this is the law is saying. On specific facts and figures, there is no general rule applied under the taxation. And you come back. So we said that related party we discussed in the previous topic page also. Connected person shareholding 50 or more will be a related party. Under the taxation, this we discuss under the taxation, and here under accounting, less than 50% will be also related party. Less than 50% shareholding under. So this is the IFRS. Now, auditor is saying even the shareholding is less than 50% is a related party, because we normally see in the 28% or more is our subsidiary. Depends upon the many factors. But law is saying economic ownership plus the legal ownership equal to 50 or more than 50. If we rely on the auditor, he is also right, because he's saying about the accounting point of view. But the city law have the different point of view on that. Why I'm sharing some market understanding. Why? Because it's also important. We getting the same feedback where the lacking is there. Why the people are relying on the auditor. Example under related party. Now here, the fourth degree we understand the wife, mother, wife, father, wife, brother. Again, it will continue on the fourth degree, children, grandchildren, grandchildren. So maybe sell or buy it from the later party. What kind of transaction? Maybe we are buying and selling also from the related party. Due to the influence, as I earlier given the example of the controlled, okay. Due to the control or the influence, you may not give on the arm length. Subsidiary will accept parent entity instruction. If the juridical person, you ask something to the subsidiary because you are in doing the investment over there, he will accept. Even you're saying sell on the extra price or less price, he will say, okay, you are the parent. One of the common practice in the market we discuss with the accounting team, and they're saying, okay, owner told us to do this. Why? Because we're saying, okay, this is you are from accounting profession. You understand this. Why it should not be there? He said, even we understand, but the owner is saying us to do this, which means the employee not able to refuse because he's getting the salary from the owner. So whatever owner is saying, right or wrong, he is doing, because he cannot deny if owner want to do. And this is the reality. We seen something wrong in the financial and audit and something. This thing owner told us to do, we did. Now, if you want to discuss, okay, discuss with the owner. And when it went to the owner, he said, okay, I don't know about this. So even you don't know, that is not the your evidence or the supporting to the towards the FTA audit, towards the FTA audit. Okay. FTA need audit based on the what are the actual supporting regulations, you complied or not compliant. Okay, anyhow, so this is the always have always have to take transaction on market value. This is the standard rule. Even accounting team knows what, still they have the limitation. And sometimes they think, okay, as a consultant, you talk and try to explain. He don't understand from our side. He's saying you are not aware. Even they are right. These are a certain limitation based on the ground reality. Calculation example will come. Okay, next page we can see that. This is again we said wife, mother, father, wife, sister. This is not only the wife, because this is a common example. It may be the other connected person also that we seen in the previous. Okay, so now so far we can cover our fourth adjustment, we covered our fourth adjustment. If any questions, so please let me know.